Have you ever blown an account and felt like trading is a scam? In this video, I'm going to show you how not to be in that position ever again. If you know how to plan and manage your money properly, you would not have a problem regardless of the amount you're trading. The reason why most traders end up blowing their account is because they know about technical analysis and a little bit about risk management. They don't know so much about money management. They don't have an expectation. They don't know what they're actually getting after, or they don't know what they are going after in the market. And at the end of the day, because of their lack of direction or lack of destination, the market always beats them around. So in this video, I'm going to show you how to create an expectation and also a roadmap that will guide you to that destination so that when you're trading with a focus, right? And when you get to your target, you would know what to do, right? So guys, if you're new to the channel, please go ahead and click on the subscribe button. If you like videos that help you level up your trading, this is the channel you need to be, right? And also guys, click on the like button as well to help the channel grow. So without further ado, let's dive back into the video. So the first thing you want to consider in money management. First of all, what is money management? Money management, is a strategy to help you manage your money efficiently, right? And this involves all of these strategies, right? Now, the first thing you want to do managing your money is your account size, right? You have to get your account funded, right? You have to get your account funded. How much are you starting with? Right? Based on the amount or based on the target you have in mind or based on the amount you want to make from the market, how much do you think is a feasible amount to help you get to that destination, right? So you have to actually have a target in mind now. So let's try to work something out here, right? So let's say your target your starting amount is actually $1,000, right? Let's say $1,000. Now I'm bringing it to $1,000 so that everyone can relate, right? Some of you are trading firms of 100,000, 10,000. You can just apply the same strategy, all right? So let's say your starting balance is $1,000, right? Now the next thing that comes right after your starting balance is your closing balance, right? Your target balance. Now, how many percent of this closing balance, of this starting balance, do you really want to make, right? How much is your target? So let's say we actually want to make, let's say 100%, right? Let's say we want to make 100% of this amount right here. Or let's just say 50%. We want to make 50% of this amount here, right? So that means our closing balance will then be $1,500, right? This will be our closing balance, right? Now, having figured out our starting balance and our closing balance, the next thing we want to do is the period of time we'll have to trade to arrive at this destination, right? Now, this is where you begin to ask yourself, right? This is where you begin to ask yourself, how many trades do you take in a week, right? How many times does your setup, shows up in a week, right? Is it 4 times? Is it 5 times? Do you take 10 trades in a week? Do you take 8 trades in a week, right? You have to figure out how many trades you will be taking in a week. You cannot be taking trades randomly, right? If you take 10 trades this week, you take 3 trades next week. If you take no, you're not being organized, right? You need to have an expectation for the week, right? So that even if you don't hit the expectation, you would be very, like the differences will be very, very close, right? So let's say you end up not seeing 5 setups this week, right? And then you get 4 setups this week. Maybe the following week you can get 6 setups, right? And you will make up for the 4 setup you took last week. So this is how you need to have a target of a trade you want to take in the week, so that when you hit that target in the week, you are off the market, right? You don't care what the market does anymore, right? You hit your target and you go away to spend time with yourself or with your family, right? But if you don't have an expectation, you're always going to be looking out for the next possible trade. You find yourself over trading, right? And over trading can kill, right? Over trading kills. Overtrading is a psychological issue that can keep you moving in circles, right? So let's say in this scenario, we are taking, let's say 5 trades, or let's say 6 trades in a week, right? Let's say we are taking 6 trades in a week. So, okay, let's say 5 trades. So let's say five trades. It means from Monday to Friday, we take just one trade, right? Or we can, maybe if we miss a trade on Monday, we can actually get a trade, two trades on Tuesday, right? But at the end of the week, we are taking five trades. Now, when you figure out, then you figure out the amount of trades you want to be taking, right? And when you figure out the amount of trades you want to be taking in a week, then the next thing is to then use it to determine your trading period, right? Your trading period. Now we're going to come back to this, but let's go to the next one quickly. We're going to come back to this, right? But we need this information before we can actually conclude on this, right? So the next thing here is data from our strategy or from your strategy, right? Now, what is the win rate of your strategy? Out of 10 trades, how many trades do you win, right? So you need to actually figure this out. And how can you get this data? Is from backtesting, right? By the way, if you don't know how to backtest, I have a video on this channel. I'm going to leave a link in the description so you can watch it and know how to backtest your strategy effectively, right? You get your strategy data from your backtesting and your forward testing, right? So in 10 trades, how many trades do you win? How many trades do you lose, right? And the best way to keep track of all of this information is by journaling all your trades, right? You have to be journaling all your trades. So let's say we have a 50% win rate, right? So let's say we have a 50% win rate. If you have a 50% win rate, it means out of 10 trades, we are winning five trades, right? Out of 10 trades, we win five trades. So this, it means our win rate is 50%. Now, so the next thing we want to do, since we've determined our win rate, the next thing we want to do is to, so that means we are going to then multiply. Okay, the next thing we'll come back to this, right? But let's just get everything all figured out, right? The next thing we're going to do is to determine the risk per trade, right? The risk per trade, right? The risk per trade. So our risk per trade, let's say our risk per trade, since um, let's say our risk per trade, let's say we are risking 5%, right? 5% for each trade, right? Let's say you're risking 5% for each trade, right? Now, if you're risking 5% for each, now it depends, this is not a fixed, you can actually adjust any of these information based on your on your trading or your strategy information and based on your risk appetite, right? I'm just giving us all of these detail as as a sample, right? So don't try to build a doctrine around it. All right. So our risk per trade is 5%, right? Now, if our risk per trade is 5%, then we can actually do a proper calculation now. So the first thing, we have our starting balance, which is $1,000, and our target, which is 5,000, which is $500. And we have our trading period. Our number of trades per week, right? Our number of trades per week is five, right? And and then the data from our strategy is 50% win rate. Our risk appetite is what is 5%. So what we want to do now is so let's say our trading period now is 1 month, right? Let's say 3 months, right? Let's say our trading period is 3 months, right? 3 months, and in each week we get five trades. So that means how many weeks do we have in a month? In a month, we have 4 weeks, right? So that means in 3 months we'll get 12, sorry, we have 12 weeks, right, in 3 months, right? So we're going to then multiply 12 times 5, right? If you multiply 12 times 5, you're going to have 60. So it means within 3 months, we are actually going to get 60 trades, right? 60 trades. So that means we're just going to have 60 trades in 3 months. So 60 trades, right? 60 trades. So equal to 60 trades. Now remember, we have our data from our strategy to be 50%, right? So it means we are going to win 30 trades, right? Let's say 30 wins. We're going to have 30 wins, right? 30 wins and 30 losses. 30 wins and 30 losses, right? So this is going to be our result at the end of the day, right? And then Our risk per trade is 5%, right? So we're going to use risk as R equals to 5%, right? So what are we going to do now? We are going to then multiply. And the last thing here, sorry, I didn't include this. Sorry, I didn't include this. Our risk to reward, right? Our risk to reward ratio, right? Our risk to reward ratio. Our risk to reward ratio, let's say our risk to reward ratio is 1 ratio 4R, or 1 ratio, let's say 1 ratio 4, right? Let's say 1 ratio 4R, right? So now 1 ratio 4, 5%, 50%, you know, this, let me put this here as 60 trades. 60 trades. I believe you guys know how we got these 50 trades, right? 60T, right? 60T. So since we now, so these are all the important parameters we have, right? Our RRR is equal to 1 ratio 4, 1 ratio 4, this way, right? Now, so we are going to then do our ground calculation now, right? We're going to do our ground calculation now. So that means we're going to multiply 60 times, you're going to do 60, sorry, 30. Remember, we are winning just 30, right? So we're going to have 30, multiplied, 30 multiplied by 4, right? 30 multiplied by 4 times 30 multiplied by 4 times 5, right? This is what you're going to have at the end of the day. 30 multiplied by 4 times 5, right? So 30 times 4 times 5, right? So if you multiply 30 times 4 times 5, you're going to get 600, right? You're going to get 600 at the end of the day. And remember, our five, sorry guys, our 5% is 5% of 1,000, 5% of $1,000. 10% of $1,000 is 100, right? So 5% of $1,000 is 50, right? So 30 times 4 times 50. Sorry about that. 30 times 4 times 50, right? So we are going to have, that's like $6,000. That's way more. That's way more compared to what to our target, right? That's more than our target. So we're going to try to bring this down since this is way more than our target, and our target is $500, right? So that means we're going to have to reduce our the trading period, right? So it means we're going to reduce our trading period. Guys, this is how you figure out. It's not something you just get at one calculation, right? You have to, try to figure out by doing calculations. So that means we're going to have to reduce our trading period to 1 month, right? And remember, we get 5 trades every week, right? So that means we're going to then reduce our trading period to 1 month, which means we're going to, be having 20 trades, right? So that means we'll be having 20 trades, 20T. So we are going to do this calculation with 20 trades now, right? So that means we'll have here 20 trades, edit this to be 20 trades, and then we're going to have 10 wins, and we're going to have 10 losses, right? So then we're going to go ahead and do the calculation again. So this will also be 10, right? This will also be 10, right? So what you want to do is multiply 10 times 4, which is our risk to reward ratio, then times 50, which is our remember, we are risking 5%, right? And 5% of $1,000 is 50, right? So that means 50 here, right? Times 50. So times 50, it's $2,000, right? $2,000, which is still above our target, right? It's still way above our target. So what do you want to do in this scenario? If this 1,000, if this 500 is your fixed expectation for the month, right? Because you don't want to be too greedy. What we are going to do now is to reduce our risk. Now, since what we have right now is $2,000, it means we just have to divide this risk by 4, right? So let's say we divide 5, let's say we reduce our risk to 1%, right? Let's reduce our risk to 1%. I'll do the same calculation again. So now we are going to multiply 10 times 4 And 1% of $1,000 is $10, right? $10. So now we are, having $10 as our risk per trade, right? So that means we're going to multiply 10 times 4 times 10, right? That is $400. Now we are getting very, very close, right? So now we have $400. Now, so let's say we increase the risk again. Let's say we increase the risk again by 1.2%, right? By 1.2%. 1.2%. Then we are going to, that means 1.2% of $1,000 will be $12, right? So that's $12. So we're going to multiply 10 times 4 times 12, right? We almost got it, 480. So let's increase it to maybe 1.3. That's $13, right? Let's increase it to $13, right? Yes, this gave us 520. Yes, this gave us 520. I think this is within the this is within our expectation, right? So it means for you to arrive at this closing balance, which is $1,500 with a starting capital of $1,000, it means you have to have 20 trades in 1 month. That's five trades every week, right? 20 trades in 1 month. And your strategy is 50%, right? And the risk per trade is 1.3%, and your risk to reward is 1.4. So that means you win 10 trades, you lose 10 trades, and with all of these parameters. So, guys, I told this is just a sample, right? So you can edit each of these parameters based on your own. Let's say, for example, you get your strategy gives you 1:3 every time, right? You can then remove this 4 and replace it with 3. If your strategy gives you 1:2, you go ahead and do the same thing, right? And just do the calculation based on what your strategy gives you, right? And also, if your risk appetite is higher than 1.3, right, you can go ahead and still increase it depending on your target, right? So this means in a month with 20 trades and 50% win rate, we can actually get 50% of our starting capital, right? So guys, at this point, if you haven't subscribed to the channel, please go ahead and do so. This is how you manage your money effectively as a trader, right? If you do this correctly, if you actually sit down and work out your finances this way, you would never blow your account again. So I hope you found value in this video. See you in the next one, guys. Peace.